Hey, welcome to the Closing Beat, everybody. Happy Wednesday. How you doing out there? Hope you're having a good day. Welcome to our show. We're financial advisors here at Jazz Wealth. We're focused on long-term investing, and that's really what we do, build portfolios, all of them listed on our website, of course. And we manage those investments for customers in their retirement accounts and things like that. But a lot of our customers are active traders, right? They're sitting around, like to play the game. I love it. They're engaged. But we have a problem, right? We're going to talk about this today. Remember yesterday, the theme of the show was, well, that's odd, right? What's odd that stands out? Today, the theme of the show is going to be, what's the plan, right? The number one email that I've gotten over the past couple days is, hey, Dustin, I've owned this stock at X price or whatever. It's pulled back X percentage, and now I'm a little bit worried. What do I do? And so I just answer back simply, what's the plan? Right? What is the plan? You've got to have a trading plan if you're going to be buying and selling stuff. You should have an investment plan for anything that you do. Now look, I've gone over this numerous times. I think tomorrow's Wine and Wealth class is going to be based on this, but if you are one of our customers, I want you to go over here real quick, just before I get started. Go into the dojo, and I'll bet you, trade. Just search trade here. This is the one that you want to look at here. This is the one that's most current. But you're going to look for this trading plan one. I actually go through step by step. How do you do it? How do you put together a little bit of a plan? And we're going to do something a little different. Charlie. Hello, Charlie, over there. Hey, will you do me a favor real quick? Go into the dojo and search trade under the video library, and the two videos that come up, will you mark them for research members too, so that they can go in? Okay, Charlie's on it. So what we're going to do, actually, to me this is so important. If you're a research member, go into the research site in about 5 minutes, and you'll see the first videos up there. Maybe we could star them up at the top so you see them. You got to have a plan, right? So many people asking questions about what to do. Now they're panicking when the stock market falls. They don't know where to sell the position for a loss or break even or take their profit. So those are great classes. If you're one of our customers, go in there. If you're a research member, that's that site that we have. You pay us $13 and you can come in and do all the same stuff. Go check it out, right? Just take a minute and have a plan. That is so important. So before I get started, I didn't want to make it seem like I was like picking on you guys. You guys probably know, but if you ask me, if you're a customer and you email me and you say, what should I do? I'm just simply going to say, what's the plan, right? Because for me to tell you to buy or sell a stock, what good is that? What if I get hit by a bus tomorrow? It doesn't matter, right? So got to learn how to develop a plan that allows you to start tracking your stats as well. And anybody that watches that's in the research site or that's one of our customers, you'll see me show a spreadsheet that I made. That's free. You can have it. You just send us an email. I'll give it to you. I don't mean to make this like a promo thing, but it's so important, man. You got to have a plan. Those of you that are out there that are more experienced can attest to that. So I just wanted to start with that. I hope that helps in some way. Just check it out. Have a plan. All right. Let's talk about stock market. That's what we're here to do today. I got on a tangent because people were asking me this question a million times. Hey, markets were higher today. First attempt at a recovery there. You may have noticed it. You might have been looking in there, seeing your position start to rally. Let's take a look and see what we got here. NASDAQ, better performing index of the day, up about 3% on the day. From the highs to the low was just over 10%. That is what's called a correction, right? Anytime a stock or an index falls 10%, it's called a correction. We had a 10% correction in 3 days in the NASDAQ there. Very impressive. There's actually only 6 other times in history that's happened. March, earlier this year, was when it happened. We had a 10% correction in 3 days. You can look at it right in there. Oh, it was 4 days, sorry. Right in there. We had 4 times in 2000 that it happened during that whole mess. We were a part of that. And once in 1987, that would be the Black Tuesday drop, the 19th, 20th, and 21st. And so we just had it again, an impressive 10% pullback. Did you kind of feel like maybe there's a little more? Like today's bounce was like, all right, I don't know. It feels like a little bounce, profit taking off the lows. I don't feel like this was anything really strong at the moment. We'll see what happens there. But if you look inside the NASDAQ, you're going to have Microsoft, one of the leaders today, 4.25% gain. It's the same names. Apple giving you a little bit of a bounce, 4% there. Amazon also giving you a little bit of a bounce. Over 50% of the gains in the NASDAQ today came from those 3 names. So again, the same names that moved us back to highs, it's the same thing. It's just repeating itself all over again. You're also going to see some of the names in the mix there, although not as big of contributors. Tesla off the 50-day moving average. All right, nice. NVIDIA bouncing there, relatively strong compared to some of the other names, by the way. PayPal also off the 50-day, very strong, looking good. We happen to own it, right? Not a big deal. It's a good position. It's been moving well. A little pullback isn't going to change anything overall, but that's basically what's going on in the NASDAQ. If you go to the S&P, that is your second biggest gainer on the day. Microsoft was your biggest contributor. You've already seen what Microsoft has done. Good day back above the 50-day moving average, but didn't close above the 50-day. That's a big deal. See what happened there? Technical traders want to see a quick close and reversal back above the 50-day. We did not get that today in Microsoft, which again makes you feel like, was this bounce like, this doesn't quite feel right, doesn't it? Right? Like, I get it. It was a great day, but doesn't it kind of feel like a trap in a way? Just a little bit, right? I can't tell you, what to do there, but sort of feels like it. Apple, also, we mentioned the bounce there. Facebook, Amazon, yada, yada. You get the idea there in terms of the bounce in the S&P. If we look over at the Dow today, this was kind of impressive. The Dow off the 50-day, very clean, very simple. It's back to positive year to date, by the way, just by a little bit. Salesforce.com. Wait, what did I do here? Salesforce.com was your biggest contributor, up 4% on the day. It is now tied for third place, by the way. Just got added to the Dow last month. It's tied for third place with Amgen in terms of the third biggest weighted position in the Dow. So kind of interesting there. Newbie, new rookie, all of a sudden moves right to the front. You got Caterpillar, 3% gain. That was the only new high in the Dow, by the way. Interesting little breakout, finally. Little volume there, moving above these highs there. Kind of looking pretty strong, if you ask me. Also a good bellwether for the economy if you feel like things are recovering there. Something to take a look at. That's what you got as far as the main indices for the day. I want to point out something real quick. We'll go over here. Here's the U.S. delinquency expectations. It's measured by the Fed to say, what do we think in terms of delinquencies? If I zoom out just a little bit for you here, obviously a huge spike during the virus declines, virus meltdown and all that craziness we just went through. But all of a sudden, delinquencies have come back. They've pulled back. People are less, they're assuming that there will be less delinquencies overall. This could be credit cards, auto loans, mortgages, you name it. That includes everything in the mix. So what I thought I'd do is I'd share with you a quick report that I can't take credit for this. This is going to be Black Knight. They came out with this here, and they actually shared the data to say, let's see the change in delinquency rates for mortgages, and delinquency means 90 days or later. So delinquency is not being late by a day. It's 90 days or later. And they said overall, everything is improving. Month over month, we're doing well. Some areas better than others. Here are the 10 largest markets with the largest delinquency rate increases, meaning it's getting worse. All the blue dots on the screen there. Miami's the worst, Las Vegas the second. You got three Florida cities here, Miami, Orlando, and Tampa. But if you look around there, southern United States basically having the largest rate increases in terms of delinquencies, people behind on their mortgages. The 10 that did the best, well, the best one was San Jose in California. You've got two California states in the mix there, Illinois, St. Louis, Richmond, Virginia, Birmingham, some of those in there, also painted in green. So if you're curious, you can look through that and see, well, hey, if delinquency rates are now moving lower, or improving, I should say, maybe there's a chance there's not going to be a lot of foreclosures. Here's one thing you look at. If you really want to get geeky real quick, you look at the forbearance expirations. People that have put off their mortgage payments legally and allowed to do that through this virus mess. The most number of expirations of mortgage forbearances come out this month, so we're not out of the woods yet in terms of that. There could still be a record number of delinquents, 90 days or more, on their mortgages, but so far it's not looking too bad. So I just wanted to share that with you. It's a little off topic, things that we normally don't cover here, but just saw the data came out, and I just wanted to, I don't know, maybe you find it interesting, maybe you don't, hopefully you do. But that's what you got. All right, FinTips videos. If you watch our YouTube series, got a couple videos coming out. Well, we got one that came out yesterday, large cap funds to invest in, ranked by performance in your 401ks. We've got the tomorrow, interesting video. Will the stock market finish higher in September? I'm going to go through the geeky data there and not just give you my opinion, so we'll take a look at that. Wine and Wealth tomorrow, we're likely going to do a series of questions that I got from customers that want me to address that in the class, but also we're going to cover these stinking trading plans. You gotta have a trading plan. When will you buy? When will you sell for a profit? When will you sell for a loss? And then if you have a chance to watch those videos, I will actually show you how to track them, how to determine if you are successful or not. How successful do you have to be in terms of getting trades right versus getting trades wrong? It's okay to lose, by the way. So we'll go through all that data there. Let's go through the sector breakdown here because I feel like I rambled a lot about stuff and I need to teach you guys something. We'll come back to that one in a minute. Here we go. All of the sectors were higher on the day. All but one gained 1% or more. So the energy sector was the only one that didn't gain over 1% today, 0.7%. And at one point today, all the sectors in the market, all 11, were up over 1%, looking pretty good. Tech is going to be your leader today, 3.3% gain off the 50-day moving average. Look, it's Microsoft, it's Apple. If you take Microsoft and Apple together, that's 50% of the gain, over 50% of the gains in the tech sector today. Just two stocks responsible for over 50% of the gains. That's that same game. You guys know it. All right, going over to basic materials, you had a broad rally here across the board. Lind, Air Products, Newmont Mining, all looking really strong on the day. Lind was your biggest contributor off the 50-day moving average there. Let me show you Newmont. Newmont recovering off the 50-day as well. That one looks pretty strong for a gold mining stock there. Sherwin-Williams about to hit new 52-week highs. Been a beast this year overall. And the materials sector, which is not all that exciting compared to your, hey, I got to buy Tesla and Apple and stuff. The materials sector is up over 15% over the last year there. So it's got a nice little rally, new highs. It's holding up. It barely budged during this last little market pullback. Not a huge decline there. So something to keep in mind. It's not very exciting, but that sector is paying paying the bills, so to speak. Industrials, here we go. Up 1.5% on the day. Look, it's going to be Caterpillar because that hit new highs. We talked about that there. A couple other names to stick out. UPS holding near highs, not budging. 3M looking strong back above the 200-day moving average. A couple interesting technical patterns there, I thought. The industrials, by the way, is still one of those sectors out of 5 that is down year to date. You're going to find that you have utilities still down year to date, really struggling there. Financials also still down. Energy is down the worst, and real estate is also still down year to date overall. Looking at a few other areas that are not sectors, but still in the mix there. You got gold miners, very strong day today. That's going to be because of the price of gold being up $11 coming off of there. People still not thinking that there's safety to be had. You got some stocks in the semiconductor space, KLA, 10 core. Here's the SMH, by the way, if you want to look at that. I just thought that was kind of interesting, but not everything was strong in that category today. Kind of interesting there. We go over to XLY, it's consumer discretionary here. Also recovering a little bit, looking pretty good. And yeah, that's pretty much all I needed to cover in terms of the sectors overall. So we can move on to new highs, new lows for the day. There were 2 highs and 2 lows. So not a lot there. You're going to have Caterpillar. You already know that one. I put that one in the mix. Algin hitting new 52-week highs. Very strong stock, by the way. Do you see that on TV? Do you see anything interesting about that? They make nearly $1.7 billion on $2.1 billion in sales, but no. DocuSign, right? Oh man, I got to go get me some DocuSign. DocuSign does $1 billion in sales. They lose $250 million, but no. DocuSign's where it's at, right? Names like that are getting all the attention, but then you have these highly profitable companies with 70+% profit margins that nobody seems to be interested in. They're making a lot of money there. I think it's just kind of funny lately how we're chasing these things. But anyways, that was the second new high. 2 new lows. You got Walgreens. This one's really weak. I mean, you can't argue with that. If you're on this stock, you're kind of holding on, right? Just going along for the ride at this point. It's very, very weak and has been near those high lows for quite a while. Huntington also, this was yesterday, our new low, and made a new low again today. And I thought Wells Fargo was interesting. I mean, it's just flirting and making new lows there. It's the closest at the moment to making new lows given what Gilead did. Gilead had a little bounce today. So Wells Fargo is at the bottom of the list. And that's really it. New highs, new lows in terms of that one there. I see, spelled it wrong. You're bad. Come on, Mr. Producer. Hashtag value. So anyways, let's move on to our, let's move on to the watch list here today. I got to teach you something. You know how I like to do this sort of thing. We said yesterday we would talk about airlines today, and that we would do some sort of analysis to the airlines. If you look through them today, you know, it's kind of a crapshoot. You look at them and you say, I don't know, American Airlines, we know they're struggling, but specifically, what does that mean? United Airlines, okay, it had a pullback today. Are they struggling? I don't know. Southwest Airlines, they're smaller. Are they? Do they have enough money? Are they going to make it through this thing? Are they performing better? Well, it's very easy, even with a small group of stocks, to get a little disconnected in terms of or confused, I should say, in terms of finding what stocks to invest in. So I'm going to attempt to do this in a way that's not horribly confusing. I tried. I just put it that way. I tried to find a way that I could get this done. Here we go. Okay, so what we have is the airline stocks here on a list. Ticker symbol, and the name of the airline, right? Simple as that. Now what we have is their market cap here, so you can see by size which one's the biggest, which one's the smallest. Hawaiian Airlines here, that's going to be your smallest overall. And then if you look at Southwest Airlines, it has the largest market cap at the moment, which is all relative, right? I mean, it changes day by day. If we look, what we first wanted to do was say, who took the biggest hit? This is just me taking a shot in the dark, right? Just trying to find content. Who took the biggest hit on their overall revenue quarter over quarter, going back 4 quarters? And so what I did is just, let's see, who did the worst there? Hawaiian Airlines, down 91% in terms of overall revenue. That's not good. Okay, I get that. Who did good? Allegiant. This seems like they took the least amount of hits. These are still very scary numbers though, and it doesn't really tell us whether we want to invest in something. So purely if you were saying, let me find the stock who took the least amount of hit in terms of their overall revenue, that'd be Allegiant, right? And they're going crazy down here. They fly like every 10 minutes there's one flying by. Southwest Airlines seems to have come in second place, but it's not enough. So what that I did after that was I said, okay, let's look at the year-to-date returns and then over the last month. Very simply, and maybe we could blow it up or something, but what I wanted to do was see who took the greatest hit so far this year. What does that tell you? Not a lot, but what it tells you is that there's a reason why some stocks were hit harder than other stocks. I don't know them off the top of my head, but by looking at the numbers, I could say, okay, there's something odd about Allegiant. I don't know what it is, but for whatever reason, they didn't fall as much. There's something a little odd about United. I don't know why, but something stands out there. It's a little bit weird. I'm not sure. American Airlines, they got hit. Spirit Airlines, that's kind of weird. Maybe those are worse off, so you could do further analysis. What I then did is I said, okay, over the last month, airlines have had a decent little rally there. So which ones are rallying more than others? That might give us a hint that maybe we only have to research a couple stocks to see, fundamentally what we might want to look at. So what we did is we plotted the last 1 month returns, and then we said, okay, compared to the year-to-date returns, how much has it recovered over the last month, right? And so I put a simple little thing here so you could see. Southwest Airlines has recovered almost 50% of what were its year-to-date declines. Well, that's impressive because something like Spirit Airlines only recovered 13%. Why was more money going to Southwest and less money going to Spirit? Okay, maybe there's something to research there. Anyways, we noticed that Southwest Airlines, okay. Allegiant doing pretty good in here. A couple others doing okay, but there's some obvious standouts to the downside. Hawaiian Airlines, Spirit Airlines, American Airlines up here. Why aren't they recovering as much? So then I thought maybe it has something to do with the cash that they have available. So we looked at their cash and we looked at their operating expenses. And we said, okay, well, just basic silly Dustin math here. How many months do they have to operate if they had to burn all their cash? Now that in the real world, that's not how it would work, but let's just assume that they only had that cash to operate and they had no other form of revenue coming in, and so they had to use it. Well, if we did that, all of a sudden we start to see there's a problem. We have here that American Airlines has less than a month worth of cash to survive. Well, no wonder they keep making it on TV and really showing how, oh my God, we're in real trouble here. They're the worst off, right? That's kind of horrible. So no wonder they sold off the most. People already knew that they didn't have enough money to make it, and they're going to have to borrow more and more money. This is dynamic, by the way. This could have changed in the last 5 minutes. That's how much this is moving. Anyways, we look through here and we go, okay, well, who's doing the best? Southwest Airlines. They've got more than enough money to survive. They could officially shut down and have enough cash to survive. Not to mention their operating expenses would go down because if they just shut down for whatever reason for 3 months, they wouldn't have the same expenses. So what I did is then just kind of rated these to say, okay, who's doing the best here? We got Southwest Airlines, you got Delta Airlines. All right, they're hanging in there. Maybe that has something to do with it. They've also shown that they're they're recovering more. I don't know what's going on with Allegiant Airlines, to be honest with you. I think it's because they're still out there and they're just plowing ahead, flying these planes left and right. People are pretty optimistic about Allegiant, and if you lived in the St. Pete Clearwater area, you probably would be too, because nearly every plane in the sky is Allegiant at the moment. But anyways, this is just I don't want to call it a top-down analysis, but it's kind of a cool way to say, well, who had the biggest hit to revenues? All right, does that tell us anything? Not really. Year-to-date returns, what are people trading? How are they investing? Are they giving us any hints, right? In terms of who's recovered the most and all that stuff, right? Southwest Airlines stands out. People are interested. Don't know why at the moment, but they are. Then we look further and say, well, cash on hand, how many months could they survive? And so that brings us to this list. I listed all of them on the watch list off to the side, but that's kind of how you can break down these airlines, and I took it a step further just to plot the performance. So if we go back and look at these airlines, who's standing up at the top here? You got Allegiant. that hasn't fallen compared to all of them in general. They haven't fallen the most, I should say. You got Southwest Airlines hanging in there. And these are significant differences, so don't let the size of this chart mess you up. That's a loss of 10% over the last year versus a loss of 58% over here in United Airlines. All right, come on, that's a big difference there. What's the reason? So I'm not saying what I just shared with you is the reason. I don't know for sure, but I can say that that's a way to do research on stocks without actually having to go look at each one of them and understand their model. What routes do they fly? How many planes do they have? Are they waiting on 737 Maxes and all that? You can simply analyze the data and look at it and go, I don't know what it is, but people like that stock. Maybe I'll look at that one. Oh, hey, look, they have all their planes in the sky. They've got 25% capacity and they're filling that 25% up. That's cool because this airline is not. So it's a quick way to go, people know something and I can see that they know something by the data, not by some crazy amount of research that I did to show how smart I am about some particular stock or company or whatever it may be. So that is your watch list of the day in its long format. I hope you enjoyed that. I didn't mean to go off on a whole tangent there, so I'll make the rest of this short. If you have a question, feel free to post it. I'll take a second and answer some of your questions here. And before we do that, we will move on to, what are we going to do? We got stocks in the news. Yeah. You have a question? Yes, sir. You over there. Videos are live. Okay. Okay, so if all that ranting I did about the trading videos, they're now in the research section for research members as well as customers, and they're marked as featured, so they're up at the top. The thing that swipes by, just wait for them to pop up. Like I said, the one is more newer than the other, but good stuff in there. Check it out there. Anyways, a couple stocks in the news here, and we'll get out of the way. I feel like this one was a little bit longer overall. AstraZeneca had some issues with the COVID trial. One patient had some mental issues with I don't know how to say it, but they didn't respond as planned, is probably the nice way to say it. And so I believe they were pausing that process there for them. Lululemon, they came out with earnings today, and boy, that's a tough one there, 7.4% there. I believe they lowered guidance was the thing on that one there. You got Tiffany just kind of cratering today, ultimately finishing down 6%. As LVMH said, we can't buy you. We're not going to be able to buy you. And Tiffany said, well, we're going to sue you. So you have the stock moving lower. United Airlines worked out a deal to their pilots. They worked out a deal to not furlough the pilots, at least a deal, like a handshake kind of deal. We'll see what comes of that. Stock was still down on the day overall. And then you had Slack. Slack was yesterday, though. This was earnings, which were pretty good. I didn't see anything odd there. I'm not sure why that one sold off. I believe they broke even, right? They didn't lose. Oh, they got a lot of downgrades today. Well, a whole bunch of downgrades. They didn't lose. They lost less than expected, but that losing less than expected was 0 per share. So maybe people were upset by that. Also, after hours here, let's take a look. You got Restoration Hardware, RH, up $40. It's trading at $360. That's off the charts here. Holy cow. They say that their demand is up 40%. I can't believe it. This is the one stock I just can't believe does so well. The company, the stock is what it is, but I can't believe that company does so well. It's the most expensive. I could win the lottery and I wouldn't spend that money on that stuff. It just blows me away. Anyways, maybe you guys are different. Apparently, you're spending the money at the Restoration Hardware. Glad you enjoyed the airline breakdown there. I'll try to answer some of your questions if I can. Never buy on the first day of a reversal. If tomorrow is higher, could that be indicated as no. Wait a minute. You never go in the opposite direction after the first day of a reversal. Meaning, if a stock is trending along and falls, you don't bet on the other direction on day one, right? That's what I mean. So what's happened here with the market, we've fallen and we've bounced. So you wouldn't bet on this direction now, right? So hopefully that's a little bit clear there. You never go against the grain on the first day of a reversal. Good? Hopefully we're good there. I love it. Can you stream in 1440p? I don't know. Can we? Stream in 1440p or something? We barely get this thing to work. They want higher resolution. Maybe, yeah. Maybe. We can try it. He says we can try it. I love it. I think we need a better camera. I think so, yeah. Oh, we can do it? Oh, there you go. We'll play with it. We'll play with it. So there you go. Got your answer. I love it. Anyone trade the IPO ETF? Oh, that's not a question for me. Yeah, it is a popular one. I'll give you that. Done by Renaissance, very well managed. If you're interested in IPOs, I wouldn't have anything negative to say about that. You subscribed to the research, can't join Thursday classes. Yeah, you can't join the Thursday classes. Every now and then I can, but I have to be careful with what we talk about in those classes. So a lot of times they're very, very specific. Right? People can ask questions, I can answer directly with exactly what to do, and that's not technically allowed as far as we know. If that changes, of course, we would change it because I think that'd be a good value as well. What do you think about Zoom rushed up compared to like DocuSign? Yeah, these are, I don't mean to be, negative about some of these, but yeah, Zoom, quick reversal there. These are the it stocks right now. I was teasing about DocuSign earlier, Zoom. Some of these stocks where it's like, okay, how are they worth that much? How can they get that much bigger? Now, I'm wrong. I'll just put it out there. I'm wrong because the stock has obviously returned great returns, and so it doesn't matter what the valuation is. If it's growing, then it's growing. That's the end of the thing there. But I just can't see how people feel like that company's worth that much. And part of it's jealousy, right? If you want to pay that level, that multiple of earnings, you can invest in Jazz. We'll take investors. It just seems like ridiculous. Do you see energy going back near virus lows? You mean the energy sector as a whole? No, I don't. Remember, if we go back towards those virus lows, we would also be assuming oil goes negative. Remember, oil went negative. So in order to return to those lows, oil would essentially have to return close to negative, if not close to zero. And I don't see that happening again. I don't see. I don't believe in market manipulation and things like that, but I just don't see people allowing that to happen, right? I don't see it. I saw Lucid priced their car, but so that's a concern, right? If you're a Tesla investor, you have Lucid, NIO, of course, Nikola. You've got competition building. At some point, that's going to drive market share away. I don't know that these cars are any good, right? People love their Teslas. It's a cult-like following and everything. But at some point, there's going to be real competition, and that's going to weigh on what people project is the future performance of a stock. And Tesla has to sell those cars. They've got to sell more cars or they can't be profitable. So any reduction in their market share, you're going to see people on TV all of a sudden go, wait a minute, how fewer cars can they lose to competition and even try to be profitable? That's a tough one. So you've got some interesting times ahead, I should say. Yeah, that's the other thing. Bishy says, I'll let them pay me to take their oil. That's what happened for a brief moment in time. And now that people understand what to do with that, I don't think it happens again. I don't think that's it. Okay, what else do I have for you? I think that's about it. I rambled a little bit today, but I hope it was all educational, right? You got a chance to learn something maybe we don't normally talk about. Microsoft's not down 30% after hours, but I don't know what you're seeing there. Anyways, I will wrap it up there, and we'll be back tomorrow. Do this all over again. If you hung with me today, I really appreciate it. Sometimes I go a little long. This one was a little long, and I hope you learned something. Enjoy the rest of your day. We'll see you tomorrow.